two ways to look at this, which is inflation is going to hit a lot of assets, or things like Bitcoin and other cryptos are exactly the cure for inflation because they kind of operate outside the traditional monetary policy world. How should we view it?
It's definitely a risk asset. It's been moving a lot like equities in traditional markets. When equities are selling off, Bitcoin tends to pull back as well. And recently, we saw the correlation between Bitcoin and the S&P 500 rise towards a one-year high. So there has definitely been some co-movement there. And I think as the asset matures and becomes more, accepted across traditional investors, it's going to be reacting to macro risk and macro headlines over the long term. So we're definitely seeing those correlations play out.
We've got a chart up right now. I don't know if you probably can't see it because you're talking on television right now, but I can see it because I have two TVs. And it is an extreme fear and extreme fear and extreme greed index. 0 to 100, 100's like just everybody's partying, pouring champagne over each other. 0 is extreme fear. We look like we're getting close to 0. What is this based on, and how do we measure sort of these two extremes?
Yeah, so it's a sentiment indicator. It's similar to like the CNN Fear and Greed Index that we use for traditional equities. And it just shows the overall sentiment from bearish to bullish among crypto investors. So right now it's heading towards the low that we saw back in July. And if you remember earlier last year, we had that crypto sell-off. That's when it kind of started to stabilize, when there was extreme fear in the market. But it's not a sure buy signal, right? These indicators can remain low for some time as the market sort of consolidates and the buyers slowly start to step back in as risks start to be discounted. So I think we're going to see some of that, some sideways movement, some consolidation. But if you look at drawdowns in the crypto market, 20% to 30% is pretty normal. It's not like the equity market. These are highly volatile instruments.
Yeah.
And drawdowns can exceed, 40% to 80%, like what we saw in 2018. So, the trend is your friend, and the trend right now is pretty weak. We've been seeing lower price highs since that all-time high back in November. So the sellers are very much in control, and we haven't seen some sure signs of capitulation. So we're definitely watching those signals very carefully.
Yeah, but you are a technician by training, and you rightfully point out that
Yes.
Bitcoin, it's had 80% drawdowns. You've got to have a thick skin or a strong stomach to have invested in this. If you held on, you're probably driving a Ferrari right now, if that's what you want, by the way. But as a technician, we're not looking at GE stock that's been around for 100 years. How much does Bitcoin and maybe some of the other main cryptos align with more traditional technical analysis right now?
It's very good. As a technician coming into this brand new market, it's sentiment driven, all right? And it tends to follow trends, support lines, resistance lines very well. Traditional markets have a lot of influences. And I think over time, over the years, we've seen high frequency trading and a lot of these sort of, ancillary events impact the market. With crypto, it's very sentiment. There's a lot of technical traders, so those levels tend to be respected. However, recently we've been seeing oversold conditions on the charts, and there's been a delay in price movement from that. And I think over time, some of these technical indicators, as you get more quant-driven hedge funds coming into this place, it kind of creates a lot of noise. So you've got to distract yourself from that noise and look at things like moving averages, longer-term indicators, because the long-term trend is still very much positive, despite the short-term swings.
Yeah.
So it's very exciting for a technician.